to pay. Thank you.
Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. So earlier this month, when First Republic Bank collapsed, multiple banks were interested in buying the failed bank. Banking regulators chose J.P. Morgan Chase, America's biggest bank. The result was that a gigantic, poorly supervised bank was swallowed up by an even more gigantic bank, and now the biggest bank in the country is about $200 billion bigger than it was before. So in order for the deal to go through, two separate regulators had to sign off. When the FDIC sells a failed bank, the law requires it to choose the highest bidder that will result in the lowest cost to the deposit insurance fund. But the law also requires sign-off from the OCC. And the OCC's job, by law, is to consider whether the merger would pose, quote, risk to the stability of the United States banking or financial system, end quote. Acting Controller Sue, OCC regulations include a list of factors that the OCC must consider when evaluating, quote, risk to the stability of the banking system. Do you know the first item on that list?
It relates to the financial stability, whether there's a threat to financial stability in the U.S.
Whether or not, and what is the item you're supposed to consider? The very first one on the list.
I believe it is whether the merger will have financial stability impacts.
Because of?
Because of the merger.
No, it's whether the proposed transaction would result in a material increase in risks to the financial stability due to an increase in the size of the combining institutions. It troubles me that you don't remember this. So how do we know if a purchasing bank poses more or less risk to the banking system? Well, one metric that regulators use is the GSIB score, which estimates the impact on our financial system of the failure of each of our largest banks. The size of the bank is a big factor in its GSIB score. So let's look at the GSIB scores and figure out if J.P. Morgan, according to the OCC's own analysis, presented more risk to the banking system than the other bidders that have been widely reported in the press. So PNC tried to buy the failing bank, but you approved J.P. Morgan instead. Acting Controller Sue, is the GSIB score for J.P. Morgan bigger than the equivalent score for PNC?
It is.
How much bigger?
I don't know the exact magnitude of it off the top of my head.
Do you want to make a guess?
It's bigger.
8 times bigger? Does that sound right? Yeah. Let's take a look at another bidder, Citizens Bank. Is J.P. Morgan's GSIB score, that is the score that shows risk to the banking system, bigger than the score for Citizens Bank?
It is.
How much bigger?
Significantly bigger.
14 times bigger?
Perhaps. I don't know the exact scores in front of me.
Controller Sue, your job by law is to determine risk to the system from making big banks even bigger. And you have a clear metric for doing that, the GSIB scores. So how do you explain approving a sale to a banking giant that increases the risk to the banking system by somewhere between nearly 800% and 1,400% more than selling to other bidders? Did you just ignore the fact that a failure at J.P. Morgan would blow a hole in our banking system that would be 8 times more than the destruction to the financial system and let them grow by $200 billion?
Senator Warren, for every merger application, we follow the law, we follow our guidelines, we follow our policies and procedures. Under the financial stability prong of the Bank Merger Act, there are a number of factors. You named one. Had we followed a strict GSIB score methodology to the exclusion of everything else, I fear that there would have been greater financial instability that weekend. When we make these decisions, I have to take into account a range of of action, a range of factors, including.
So if I can, I know I'm nearly out of time, but if the chairman will let me pursue for just a minute here. Are you telling me that there are other factors that weighed against the other bidders that weren't there for JP Morgan Chase, and that's how it is that you went with the biggest bidder, even though the biggest bidder, by your own GSIB scores, increases risk to the financial system?
What I'm saying is that a GSIB score approach to that factor that weekend would not have been a wise one.
Because that's why we're here to exercise oversight. You can't just say, I decided on something else without putting some facts behind that.
The GSIB score framework is not part of the framework that is listed there. There's a number of factors there. We're taking into what's very important, especially when there's a failing bank situation, is that the government act in a coordinated and timely manner, that we minimize losses to the DIF.
You had one job to do, and I appreciate. I'm out of time here, and I appreciate your forbearance here, Mr. Chairman. But I do want to say the single biggest threat to the U.S. banking system is concentration. We're all pushing harder for merger guidelines so that we don't get more concentration in the banking system. You are the one person who was supposed to use judgment on the question of, as between multiple sales, which one was the right one to go with and which one presented more risk to the banking system. According to your own metric, you chose the one that gives us more concentration in the system. I am very troubled by that decision.
Senator Tillis from North Carolina is recognized.
Thank you, Mr. Chairman.